Sharon, trusted business and financial intelligence.
Hello and welcome to Sharon Business Radio, where we bring you the latest updates on money, business, and the economy. I am Billy Nwogo, your trusted guide to business news, market trends, and economic insights shaping Nigeria and the global landscape. Stay with us as we keep you informed and ahead in the world of business. The National Association of Nigerian Students (NANS) has issued a 4-day ultimatum to South African business interests operating in Nigeria, urging them to leave the country. This directive was announced in a statement released in Enugu by the National Executive Director for Corporate and Private Sectors Engagement, Mr. Bestman Okorafor. According to NANS, the decision follows ongoing reports of attacks, intimidation, and the displacement of Nigerians and other African nationals in South Africa. The association stated that if the ultimatum is not complied with, it may proceed with actions including the picketing of South African businesses across Nigeria. NANS also called on the federal government and the African Union to take stronger and more decisive steps in addressing the situation. The student body further emphasized Nigerians' historical support for South Africa during the apartheid era, noting that such relations should be upheld with mutual respect. The federal government, through the Foreign Affairs, has continued efforts to evacuate affected Nigerians, with hundreds already returned home in recent weeks. The federal government has warned petroleum marketers against maintaining high petrol prices based on profits from previously acquired high-cost fuel stocks. The government expressed concern over the continued gap between declining global crude oil prices and the cost of premium motor spirits (PMS) in Nigeria. It stressed that Nigerians should benefit from lower fuel prices as replacement costs drop in a deregulated market. This one was issued during a stakeholders meeting on cost-reflective pricing of PMS held at the headquarters of the Nigerian Midstream and Downstream Petroleum Regulatory Authority (NMDPRA) in Abuja. The meeting brought together key players in the downstream sector, including representatives from Dangote Petroleum Refinery, the Federal Competition and Consumer Protection Commission, and major marketers associations. Speaking at the meeting, the Minister of State for Petroleum Resources, Oil, Senator Eniken Lokpobiri, stated that temporary gains from older, more expensive fuel inventories should not be used to justify sustained high palm prices. He emphasized that as marketers restocked at lower cost, reduction in procurement expenses must be reflected promptly in both export and retail petrol prices, in line with a competitive and efficient regulatory market. And on global market, the AI-driven rally that turned South Korea into one of the world's hottest equity markets ran out of fuel on Tuesday as of 9:50 a.m. First, the Korean benchmark tumbled over 7% to trade at 7,478.621, down 572.72 points. The plunge comes as a sharp reversal for a stock that inched record high this year, jumping beyond the 9,000 milestone just days earlier, riding the same wave that has now dragged it down. Investors rushed to lock in profits after Samsung Electronics unveiled stronger than expected quarterly earnings, triggering a broad sell-off in heavyweight technology stocks and forcing the Korean exchange KRX to activate a sell sidecar to calm the market. Program trading on the benchmark Kospi was suspended for 5 minutes at around 10:23 a.m. after the index plunged sharply, according to Yonhap News. On the tech front, Samsung Electronics slumped 7.4%, while SK Hynix fell 6.4% ahead of its planned US listing later this week, raised around 28 to 29 billion US dollar, making it one of the world's largest share offering. Beyond Tech Hyundai Motor declined 5.9%, while Hanwha Aerospace lost 4%. Hanwha Ocean plunged 23% after a South Korean consortium that includes the shipbuilder failed to secure Canada's multi-billion-dollar submarine procurement project. Among the gainers, cosmetics maker Amore Pacific rose 2.9%, while leading refiner SK Innovation gained 3.9%. The company rejected operating profit of 89.4 trillion, $158.4 billion for the April-June period, beating the average market forecast by 6.2% according to Yonhap Infomax. The estimate includes provisions for employee bonuses. Excluding those provisions, Samsung's quarterly operating profit is estimated to have reached around 100 trillion won. Despite the stronger than expected earnings, investors opted to cash in after months of gains fueled by optimism around artificial intelligence dragging the broader technology sector lower. And that wraps up this morning edition of Sharon Business Radio. For more updates on business, finance, and the economy, stay tuned to this station. I am Billy Umogu. Thank you for listening. Sharon Business Radio, the voice of the economy.